Welcome to the deep dive.
Great to be here.
Today we're diving into something pretty wild, really. How social media can actually be used to, well, manipulate stock prices.
Yeah, it's a fascinating and slightly scary intersection, isn't it?
It really is. We've looked at some material exploring the tactics the tech involved.
And our mission, really, is to unpack how this manipulation works and what it might mean for you, for investors.
Okay, so let's start with the basic idea. Social media influences how people feel, how they trade.
Exactly. And that behavior, in turn, gets picked up by these trading algorithms.
The algorithms that basically run the market these days.
Right. They're designed to sniff out sentiment, and social media is like this huge real-time fire hose of sentiment data for them.
Which sounds useful, but also creates a direct path for messing with things.
Precisely. A direct line for manipulation.
Okay, so what's a classic tactic? I know we read about pump and dump.
Yeah, the old pump and dump. It's just supercharged by social media now.
So explain that again. It's like generating online hype.
Yeah, you flood platforms with really positive, often misleading or totally false info about a stock.
To create a buying frenzy.
Yeah.
Get everyone excited.
You got it. Everyone sees the buzz, thinks, wow, this is it, and jumps in.
Driving the price up artificially.
And then the original manipulators, the ones who started the hype,
No, they sell.
they sell their shares at that inflated peak price.
Leaving everyone else.
Holding the bag, basically. The excitement dies down, the price crashes, and later investors face big losses.
Wow. Like a digital trap.
Pretty much.
But it's not always about pushing prices up, is it? There's the flip side, too.
Oh, absolutely. Spreading negative rumors, false bad news, what some call bashing a stock.
To drive the price down.
Just as effective. Fear is a powerful sell signal, right?
And that selling pressure.
Yeah.
Does that trigger the algorithms, too?
Definitely. They see the negative sentiment, the sell-off starting, and they can automatically dump shares, making the price fall even faster, like an avalanche.
Okay, and a key part of making all this work, both the pumping and the bashing, is fake accounts, bots.
That's crucial. Armies of fake accounts, automated bots, they amplify the message.
It seems like there's a huge consensus or widespread panic.
Exactly. It creates this illusion. They're trying to fool both human investors and those algorithms we talked about.
So the bots help create this, artificial momentum.
Right. And the algorithms are constantly scanning social media, looking for keywords, analyzing sentiment, like positive versus negative mentions.
So a sudden burst of coordinated fake posts.
Can look like a genuine, significant shift in market opinion to an algorithm.
And that leads to
Rapid, big price moves, flash crashes, sudden spikes. Stuff that might have zero connection to the company's actual value or prospects.
It's just wild that a wave of, fake tweets could potentially trigger a market event like that.
It is. And then you layer in social media influencers.
Right, people with big followings giving financial advice.
Sometimes it seems like genuine, impartial advice. But regulators, like the SEC, are really zeroing in on this. Because sometimes those influencers are actually part of these coordinated schemes. They get paid or have a position, and their advice is really just part of the plan to pump or dump a stock.
Wow. So someone you follow and trust online could actually be, misleading you for profit.
It really muddies the waters, makes it hard to know who to trust.
Okay, so pulling it all together.
Yeah.
Social media is this super fast, super broad tool.
For influencing how investors feel, their sentiment.
And when you combine that power with the speed and scale of algorithmic trading,
you create these vulnerabilities, opportunities for people to exploit price movements for their own game.
So the main takeaway here is this tight link, right, between online chatter, social media sentiment, and how these powerful trading algorithms react.
That connection is where the manipulation happens, and it can really hurt everyday investors like you listening.
Which brings us to a really important final thought, doesn't it?
Yeah. In this environment, with so much noise online, financial talk everywhere, how do you tell what's real insight and what's, deliberate manipulation?
It really hammers home the need to be skeptical, to check things out for yourself.
Absolutely. Verify information. Look at multiple reliable sources before you make any investment decisions based on something you saw online.
Seriously. In this digital age, maybe a healthy dose of skepticism and doing your homework are your best defenses, especially when it's your money on the line.
Couldn't agree more.
Well, that's all the time we have for this deep dive. Thanks for joining us.